as a business, we understand that a lot of money that we make, it goes to taxman at the end of the year as well. But in this particular video, I really want to help you optimize your business and become more tax effective. So at the end of the year, we will actually pay less tax legally. This is not some kind of loophole. This is a completely legal thing. My name is Zain Shah. I run multiple online business like selling on eBay, selling on Amazon, selling on Shopify, Etsy, YouTube channel, affiliate marketing. And I want you to really understand by sharing my journey how you can also make £100,000 every single year, and that is completely possible. So I talk about all that kind of stuff like personal finance and running a business and those sort of things as well. So if you are into it, you want to become more financially sensible person, consider subscribing. That will be a massive help. Let's talk about tax as well. So let's say you started a business. When you need to register a business, because to become more tax effective, we do need to understand how tax is working. This is not something we just leave on our accountant at the end of the day. We do need to have a good understanding even as a business person, because this is also a part of running business at the end of the day. So the first thing that you need to do is, once you start something, you don't need to register anything until you make a turnover of £1,000. That's what HMRC tell us. So this is turnover. This is not the profit. So let's say if your turnover within one tax year or financial year is only £300 or £400, you don't need to declare anything. But if you go over £1,000, then you need to do register as either a sole trader or a limited company, but that is entirely going to be your choice at the end of the day. But I find the limited companies are more tax effective. So if you are going for a limited company, there is a company called Osome, and they do kindly sponsor this channel as well. So Osome only charge you £12. Like if you go and register a limited company by yourself, that also costs you £12, but you have to go through all the paperwork and each and everything. So why not just let Osome take care of each and everything? So you pay them £12 and they will register a business, and they will even get you a best business bank account, and they can help you really optimize your tax and everything. So do check them. I'm going to leave the link for them inside the description. First thing that we need to understand that it's not like you're gonna start paying the tax on everything straight away as soon you're gonna register your business. Obviously, there are certain things that we do need to understand. So the first thing is like it's going to be your personal allowance. So the way personal allowance work, because in the UK we have tax brackets right here. So let's say your profit, this is, I'm talking about profit at the end of the day. This is not like a turnover. If that was less than 12,570, you don't pay any tax on that. But any income you make over 12,571 up until 50,270, you pay 20% tax on that. And a lot of people get confused. They say, okay, well, if I go over 50,000, then I'm gonna pay 40% tax, and then all of the sudden I'm making less money. This is not how it works actually. You only pay 40% on the income which is over 50%. Anything which is still less than 50%, this is like a bracket system. So anything less than 50%, it's still gonna be classed at 20% rate as well. And anything less than 12,570 gonna be 0%. So if I give you one example, let's say you made £50,000, then out of £50,000, this is like, let's say your turnover, you need to deduct your expenses. So let's say £20,000 was your expenses. I'm just giving you a hypothetical number. Now you are left with the £30,000 profit. Out of that £30,000, you're going to deduct your personal allowance first, so which is 12,570, and then this is whatever is the leftover. You're going to pay 20% income tax because you are in that bracket, and you're going to pay 9% tax on national insurance number. This is how it works for everybody. But as a business, as a limited company, how limited company becomes more tax effective. So first I'm going to talk about how you can really optimize a business, and then once you take out the money, and obviously no business person will leave a money inside a current account. Obviously they're going to put in some kind of saving account to beat the inflation, and I'm going to talk about what is the most effective way to deal with that as well, because it's all a complete package at the end. So first of all, once you are a limited company, you don't pay pay national insurance number. You only pay corporation tax, which is around 19%. So you registered a limited company. Let's say now your limited company have made £50,000 in a terms of turnover. This is not your profit. So you deduct £20,000 in a terms of expenses. This is another example. And then you have £30,000 left inside your limited company. Now what a lot of limited company directors will normally do, they actually take out a salary from a limited company. So what they do once they are taking out a salary, they only pay themselves a salary which is less than their personal allowance. So they pay up to 12,570 because they know they're not going to be paying any tax on that. Now if they have a family member, let's say if it's a wife, then they will actually hire their husband or any other family member inside their company, but that person have to be legally working in a company. They do need to make proper contribution. It's going to be a job for them. So what they do, they actually use their personal allowance as well. So let's say as a company you made £50,000, now your expenses was £20,000, right? You're left with £30,000. You paid yourself as a director, yourself a salary 12,570, and then you pay £2,000 in terms of a dividend as well. This is to one person. And if you hired your wife as a secretary in a company, a lot of companies you will see, like especially small companies, they will have a director and then they will have a secretary inside. So they do the same for the secretary as well. So this is the way, not just 12,570 plus 2,000 in terms of dividends for one person, they are able to take out this one for two different people. Only pay corporation tax, and you can leave the money inside a limited company, and then once you will come to next financial year, you can actually start taking out the salary again and use your next year personal allowance for next year. So that becomes more tax effective at the end as well. Now what we need to talk about is once you have a saving. So once you have a saving, nobody gonna leave the saving inside a current account, because once you leave a saving inside a current account, your money is just like being eaten up by inflation. Like if you leave £20,000 today, it's not like 2 years from now the value of that £20,000 won't be 20,000. Like it will show they are 20,000, but it won't be 20,000 seriously, because inflation eats up each and everything. So what most of the people will do, they will invest their money. Either they will put in a saving account or they will put into some kind of stocks and shares. The most effective way to do that is to actually have there are different types of ISA. So what the ISAs are at the end of the day, it's your individual saving account. So the way it works here, the government say every tax year you can save up to £20,000 and any interest you're gonna earn on that one. If that one if it's not the ISA, then you will pay the tax on the interest that you're gonna earn. But if that's an ISA account, like many banks and building society offer that types of account as well. You can have as many you want. You can have like a cash ISA. You can have saving in the terms of cash. You can have saving in the terms of stock. You can have in the terms of like a lifetime ISA as well. There is no limit on that, but there is a limit in the terms of how much money you can put in altogether. So that's currently is £20,000. So that's something you need to keep in mind. But if it's a lifetime ISA, then obviously you can only put £4,000 into that one as well. So by investing that kind of money into ISA rather than just leaving it on the table, it gives you a benefit of not paying tax on any interest that you're gonna earn from your saving accounts. So that's another benefit. Then obviously if you are running a business, there are many legitimate expenses that you can deduct. For example, let's say you are running a business, you need a laptop, you buy that laptop, and then you are using that laptop just for a business purpose. You are using your, let's say, a car, or you have a storage, you have a space somewhere, you are buying, like in my case, all the packing supply, all the postage cost, all the storage cost, the fee that we pay to eBay, Amazon, the equipment that I buy to run a business at the end of the day, stationaries, Wi-Fi connections at our commercial places, electricity, gas, a lot of that can be deducted as expense from a business as well. So at the end of the day, that does reduce your tax bill. So I suggest having a limited company especially once you have somebody who you can hire, as long as you can obviously afford to pay from a limited company. That becomes very tax effective. And make sure you check the links for the Osome Insider description. That will be a massive help. Thank you so much for watching.